Welcome, ladies and gentlemen, to the special called City Council meeting for the City of Farmers Branch. It is Tuesday, July 5th, 2022. The time is 12 p.m. We will begin with our only item, A1, which is 22-394, consider increasing senior and disabled homestead exemption and take appropriate action. So I apologize for the rushed meeting. We had some incorrect dates on the latest day that this could be done. After talking with DCAD in order to get this potentially on the books for this upcoming year and for a benefit for our residents this year and not next, we had to make this decision to do it today. So that is why we're here, but we will go ahead and start with the presentation. Ms. Evans-Jones.
Mayor, Council, hello. Sherelle Evans-Jones, Director of Finance, and I am here to present a couple of options in terms of changes to our property tax exemptions. So what is the ordinance that is before you, Ordinance 3750, about? It's about making some changes to increase both the over 65 exemption as well as the disabled persons exemptions. They're currently set at 80,000 and 60,000 respectively, and you see before you kind of what that financial impact is to the city. And so in our future state, we have an option to consider increasing those as indicated on the screen to a rate of 100,000 for the senior exemption and 100,000 is the proposed for the disabled persons exemption. I'm going to present a couple of options for those and kind of walk you through an alternate recommendation if that is something that the council is interested in. I provided to you just one pager that is listings of some of the other areas, cities, and their property tax, their property tax rate as well as the respective exemptions. And as the mayor indicated from his opening, this is something that we actually do need to get back to DCAD pretty quickly. They have extended their time frame to allow for us to have this meeting today in order to make a decision. Okay, so this one page is discussing just our over 65 exemption. So current state and what that means in terms of a savings to the taxpayer who qualifies within this particular exemption status, as well as what that means in terms of revenue to the city, with that exemption in place as it is. So one option that we can consider is increasing that exemption from 80 to 100,000, so an increase of 20,000. And what I'm showing is a cumulative taxpayer savings. So you can see in the red font. So you can see in the red font what an incremental change would be in making an incremental savings in making that change, as well as an incremental revenue loss. Those are presented in the red font. I also presented there what that savings would represent in terms of a tax rate, an equivalent tax rate savings to an individual having an average property within this particular property class. Another option, because I like options, everybody likes options, right? Another option is to consider a $10,000 increase to move that rate from 80 to 90, and you can kind of see the steps, and this is in relation to current state. So those incremental changes and savings are presented in relation to our current state. One other thing that I just wanted to mention, because it's helpful to note, is that currently qualifying in this particular class of exemption are a little bit more than 2,300 parcels. And those 2,300 parcels have an average value of about $144,000. Obviously that's an average value, so some people who qualify in that category may have larger or more expensive parcels, et cetera, but just taking the total valuation as a function of the number of parcels that's in there, it works out to be about $144,000 per parcel. And then just giving you an idea of what that change might mean in a per $1,000 capacity. One thing that's helpful to note is that in each of these situations, both the over 65 as well as what we're about to move into is the disabled persons exemption, all of these properties qualify for an initial 20% homestead exemption, to the extent that the individual is living within the property and meet those requirements. And so that homestead exemption, already kind of knocks off, for this asset, for this parcel type, knocks off about 10, almost 11 cents based on that value. Okay. Disabled persons, we're gonna go with a similar layout because it's easy. If we understood one, we can get the other one. And so our current state is 60,000 for disabled persons exemption. You can kind of see the corresponding taxpayer savings as well as revenue loss or revenue forgiveness, we would say, in terms of the city. You see that number is significantly different than what you saw on the previous slide, and I'll show you why. So one of the options that was proposed, and this is what is embedded within the ordinance that is before you, is to increase that exemption to 100,000. And you can kind of see the related savings, and you see me saying here, or potentially greater than our existing tax rate. And I'll walk you through why that is, but you can kind of see the incremental changes in terms of revenue. Another option that could be considered today is to make that increase $20,000, so to take it from 60 to 80, and those are the relative taxpayer savings as well as revenue loss. Either way, this is not a huge, the city is in support of making this change. Either way, it's not going to be a major financial change, but the reason that I would propose from a management perspective to consider a $20,000 increase and not the full 40 is because basically I'm showing you here that the assets that qualify in this category, the average value is $102,000. So by the time you take the 20 off for homestead, if you offer a $100,000 exemption in this category, it's actually kind of more than what the values are worth on average. So offering a $80,000 exemption kind of materially takes away all, just about all of the tax on an average or on a blended basis. Now, from a DCAD perspective, they're gonna reduce that basis down to zero. So it's not gonna be, to where it offers some sort of a credit. It would reduce the person's basis if their value was less than 102 or, right around there. It would reduce their basis. If we elected to go with a $100,000 disabled persons, it would reduce that basis down to a near, zero capacity. But I'm saying that you get the majority of it by going 80,000. And that's all I got to say. Any questions that I can help with?
Councilman Merritt, any questions?
Sherelle, thank you for the information. I also looked over the weekend at the DCAD and found the same material that you shared with us and saw where right now there are only, I believe, 4 entities in the 22 estimate
Yeah, I saw that as well.
that are over 100 or at or over 100,000. So if we do make this, the adage that we're, paying more taxes than others is sort of dispelled because we're actually forward thinking and taking advantage of the opportunities and putting ourselves in the upper echelon of granting this level of relief, if you will.
And may I add something to that as well? I did something similar, whenever, presented with a question like this, I'm like, what are other people doing?
Sure.
And we tend to like to look at, our 4 cities around here, Addison, Coppell, et cetera. So Coppell is proposing to move to, at least based on what I can see in the 2022 estimates, they're proposing to move to a $100,000 exemption in both of those classes. But it should be noted a couple of things. One, their homestead exemption is 5%. That's a material difference in terms of what individuals will feel in terms of relief, not just within these categories, but all throughout their city. And if I'm not mistaken, yeah, their tax rate is pretty similar, but their valuation may be different. So you have to kind of take those multiple pieces. You can't just look straight at the exemption amounts because that homestead exemption matters as well.
Right. And Richardson's even more dramatic because they have a zero exemption.
Right,
So,
exactly.
but I don't really have any, I'd like to hear what the rest of the council has to say, but I appreciate the information and I'm interested in the discussion.
Mr. Jackson?
Thank you, Mayor. Thank you, Sherelle. So I noted as well, David, that Richardson and Coppell had much lower homestead exemptions, and so I kind of tossed those out, and I looked more for what cities around us are the same, because in my mind, it doesn't make sense why they're different. I campaigned on this, and it just makes sense to me that they would be the same. Dallas is at 115 for 2022, projecting, or at 107 now. I'm not necessarily favoring that we be the lowest taxing entity in the Metroplex, but I think that doing this for our seniors and disabled makes a lot of sense when you consider the common concern of I'm being taxed out of my home and given the property values, the way they've been. So I do favor the 100,000 disabled, the 100,000 65. Couple of questions. What is the deadline, the normal deadline, and what?
The first.
July 1st? Okay. So if we're gonna make any changes to our exemptions, we have to file that by July 1st.
Correct.
And DCAT's given us until when?
Tomorrow.
Okay. It was very gracious of them. And so, got the cost of the city. What I noticed was in the communication that went out, we didn't give residents the number. And in the agenda center, the copy of the ordinance was not posted. So just procedurally, help me understand why we didn't provide that information more fully to residents. Anybody have?
I could take that one. I think just the nature of trying to get all this resolution done and negotiating with DCAT, I think we were just trying to meet the posting deadlines. We had a holiday Monday. That's on me.
Okay. Yeah, I got my packet Friday, so we had the information. It just, I think we need to be a little more thorough in making sure that residents have all the information. The newsletter that they got didn't say it either, so obviously it causes people to question, well, what's going on? Special meeting at noon on a Tuesday after a holiday, we didn't get all the information, and it just gets ugly and ridiculous from there. So that's all. Thank you. So the cost itself, it's going to be a reduction in our revenue. How do we account for that reduction in revenue? General fund?
Well, all these property tax revenues are flowing into general fund, and so these would be reduced revenues
Okay.
that would come into the city. Possibly they could be offset with increases in other areas. We're still in the budget process right now in order to determine that. Overall, between these two changes, these are items on $60+ million general fund that we feel, we're talking roughly $500,000,
Right.
$700,000. We feel that we can make accommodations for this.
Absolutely. Last question is, thank you for sharing the formula, because I'm not a senior or disabled, and so I didn't know what came first. The homestead, the disabled, the seniors.
Homestead first,
Homestead
and then I was researching to see there's a such thing as a complex account, and so it's possible that a few of these may qualify for both exemptions, both the senior and the disabled persons. That is kind of more of a special combination. And typically, you would make an election for either of those. So that's why my numbers are more like, let me show you what this looks like, and let me show you what this looks like, and kind of give you the scope of the population, which is not a ton of people.
Right.
Not a ton of parcels on, roughly about a little bit more than 13,000 parcels. So you're talking 2,300 for one and less than 150 for the other. So these are not a material number of parcels that we're talking about.
Right. So how does the veterans and disabled veterans deductions work into this? Are they after homestead, after senior or disabled? Do we know where they fall in
They
line?
appear to show on the details that I have as a separate, so disabled veterans, and 100% disabled veterans are showing as a separate class of type of parcel on the reporting that I get. And so that leads me to believe that it is possible for them to be combined, but it is more of a exception rather than the rule. But it is possible for those to be combined with homestead or other exemptions, but that'll be on a case-by-case basis handled externally from this organization.
Okay, so that's not a city tax, that's a county tax, or? 'cause
That's not an exemption that we they're definitely taxed,
Right,
but that's not an exemption that we're currently walking through making amendments to at this point.
understood, so no change to that, then our revenue could be a little bit lower given the veteran and disabled exemptions, if they're on top of.
If the ordinance before you was making changes to that, which it is not.
Okay. Well, yeah, so, sorry, I'm confused. We're not changing the disabled vets
Correct.
or the veterans or survivors. And so if we change our city tax and it cost us, let's just say, $279,304 from a 65-year-old, and that 65-plus-year-old is a veteran, they get another $12,000 if they're disabled, but if they're disabled, they also get the disabled? You see why I'm confused?
The best I can explain, and I see you gesturing, et cetera, Kevin. You
No,
feel free to jump in.
No, I'm sitting here
But-
thinking this is when Pete needs to be here.
But what I can tell you is that these are all listed, so there's a over 65. There's a separate, all of those parcels are separately accounted for.
Okay.
That's how I can tell you that I got 2,300 of those and the value. I have items that are listed as disabled veteran, and I have a specific number of parcels and a specific value. So what I'm explaining is that I believe those parcels that qualify for both are far and few between, because they tend to list them separately in the way that they're evaluated, in the way that they're taxed. So changes to disabled veteran or changes to disabled veteran would be something that we would need to consider separately.
Okay. Yeah, I'm not looking to propose a change. Maybe that's something we look at next year perhaps. It is a very small
Yeah, it is.
part of our market value, 6.5 million between the two against the 190, 200 million in market valuation. Your individual and difference on the 65 plus actually matched my number exactly, so well
Well,
done.
very good. There we are.
Can we go back to, I think it's slide 6. I just want to make sure that I
Now you
understand,
want to stop?
right there,
Okay.
that's the 6. Help me understand what the 11780 of incremental savings is versus the city revenue loss in the 279,304
I'm
again?
saying that in current state, that with this exemption, individuals who qualify are saving this amount.
Right,
In the future state, if you pick this, they would be saving that amount. It's the
Right.
difference between those.
and
two.
those two, okay,
Uh-huh.
all right, good. I just wanted to make sure I followed that. No more questions, thank you, ma'am.
Hi, thank you for letting me invade your space.
Councilmember Williams.
Thank you, Sherelle. This is a very clear understanding. I appreciate the presentation because that makes it very easy. It makes sense to me on the disabled to do the 80 instead of setting a rate that's below 0. Just from an accounting standpoint, that makes more sense to me. And so if we're looking at that, I think your option 2 on the disabled makes sense because you're essentially looking at 0 tax at that point anyway. So I agree with your option 2. It just makes it easier for everyone involved to plug numbers correctly. So, but with our property values increasing as they have, and with the rate of inflation, and with our seniors and our disabled carrying kind of a larger burden of feeling those kinds of increases in the cost of living, it makes perfect sense to me why we would do this right now. So I'm for it.
Councilmember Roman?
Thank you for the presentation. I just had a question. It says on here, the calculations are based on an average property value of, and it gives a specific amount. What calendar year are those values for?
I'm using the 2021.
Okay.
Because 2022 is being developed right now, so it wouldn't be a good basis.
Okay. And with that, I just wanted to make sure I understood that, but I don't have any other questions. I'm also in support of it.
Before we move on, I just want to confirm that you're not talking about postponing the decision today to make sure we can get more information out and control the chaos?
No.
Okay.
No delay.
All right, just want to make sure. All right, well, we have a few different options here. I guess, we need to go around and figure out what it is we're all in favor of. I'm personally in favor of, after seeing the information provided by Ms. Evans-Jones, I've kind of moved off both at 100 to 180 for over 65 and disabled respectively. That makes sense to me, the way you presented it. If we go 100 and 100, I'm also not going to lose any sleep because the incremental dollars we're going to lose isn't enough to worry about. So from that standpoint, that's where I'm at. Preference A is 180 for me, but we can go around and see what people are kind of interested in, or if someone just wanted to make a motion, we could see how that flies.
I'll just say philosophically, the two being different doesn't make any sense to me. It just doesn't. Disabled, how do we know that people over 65 have any more difficulty paying their taxes than people who are disabled? I'd argue they all have their same reasons, and to me, at the end of the day, it's the same amount of brevity. Just to be consistent with Irving, Richardson, understanding Richardson and Coppell have low or no homestead, but the two are consistent between Irving, Richardson, Coppell, Dallas, and Carrollton and Addison is only 10,000 apart. That's just no reason why.
I think for me, I prefer 100 for both.
Okay.
All right. Well, I move to approve ordinance 3750 then.
As presented, I
Second.
have a motion by Councilmember Williams, a second by Councilmember Roman. Before there's any more discussion, I just want to make note that no one signed up to speak to this item since it is marked for action. So therefore, no one has said anything, but with that, I will say all in favor.
Aye.
Aye.
All opposed? Motion passes unanimously. Seeing no other business to conduct, we will adjourn today's special call meeting, and hopefully everyone that can take advantage of this enjoys it this upcoming tax season. So, thanks. See y'all later.